Hello and welcome to part two. Great job, guys, with part one. Now we're moving on in our stock analysis and the use of the NASDAQ dozen. So, step one, revenue. Stock growth starts with a company making money. Fundamentally, if a company isn't bringing in any money, it can't pass profits along to its shareholders. In other words, it all starts with revenue. Revenue will give you an idea of how much money the company is making. If revenue is consistently increasing, this means that the company is growing. As the company continues to grow, the stock price will appreciate in value. How to score revenue. Pass. Give revenue a passing score if revenue is increasing. Fail. Give revenue a failing score if revenue is decreasing. Moving on to step two. Earnings per share. If revenue tells us how much money is flowing into a company, earnings per share tells us how much of that money is flowing down to shareholders. EPS tells you how much money the company is making in profits per every outstanding share of stock. The higher the EPS is, the more money your shareholders or shares of stock will be worth because investors are willing to pay more for higher profits. How to score EPS. Pass. Give EPS a passing score if EPS are increasing. Fail. Give EPS a failing score if EPS are decreasing. Return on equity, ROE. Return on equity gives us a glimpse into how effectively company management is producing a return for the owners of the company based on the amount of equity in the company. To calculate ROE, divide the average shareholder equity during the past 12 months by the net profit the company has made during the same 12 months. How to score return on equity. Pass. Give ROE a passing score if ROE has been increasing for 2 consecutive years. Fail. Give ROE a failing score if ROE is decreasing. Step 4, analysis recommendations. Analyst recommendations. Analysts conduct extensive research on a stock and then issue a recommendation as to what they think the future holds for the company. If the company's future outlook is positive, the analysts recommend a buy. If the company's future outlook is poor, then analysts recommend a sell. How to score analyst recommendations. Pass. Give analyst recommendation a passing score if the consensus recommendation is a buy or strong buy. Fail. Give analyst recommendation a failing score if the consensus recommendation is less than a buy. All right, so now we're going to use those 4 steps to analyze these 4 stocks. So again, we're using the NASDAQ.com website because I feel like it's the most user-friendly. So here you can see that I have done so already with Apple, but I'm going to, I didn't want to do that. Going to go ahead and start over so you can see the process. All right, we go over to the NASDAQ.com website. AAPL is Apple Computers common stock. Go down, and the first thing that we are looking for is revenue. We will find revenue under financials. So go down, scroll down, and it says total revenue right here. So we want to see an increase in total revenue. So 2017, it was at $229 billion. It moved up in 2018 to $265 billion. But then it went down in 2019 to $260 billion. So it has actually gone down. We probably know that part of the reason that revenue has gone down is because of the coronavirus and everything happening, but it's still a fail this time. Earnings per share, EPS. So earnings, we're going to find under this earnings tab right here. So click on that. Move down so we can see the earnings data. The earnings data can be found in this chart here. We could see that all the different quarters for the earnings. And you can see that earnings per share represented here as well. You can see the yearly forecast, quarterly forecast, change in consensus, number of changes. All this is really good data. But the main thing we want to know for our stock analysis is how the earnings per share, is the earnings per share going up? It was at earnings per share reported was 1. We want to look at the reported, not estimates at this time. So right now we're looking at $1.25, and it went down to 64 cents. It stayed at 64 cents. So we're going to say that earnings per share failed. So highlight that and make it bold. That way we can see which ones. Now we're moving on to return on equity, ROE. So we're going to find ROE under financials. Click on financials. Scroll down. And we want to use this tab over here called financial ratios. Click on that. Now we can move down to, we have both pre-tax ROE and after-tax ROE. Okay, so we want to look at those. 48, 36, so 48 to 68, 68 to 73, 36 to 56, 56 to 61. So it's passing on both of those. So on ROE, it is a pass. All right, last one, analyst recommendations. So we're going to find analyst recommendations under analyst research. Click on that. Go down to see all the analyst research. Based on 12 analysts offering recommendations for AAPL in the last 3 months. It is a strong buy. Consensus is a strong buy. And you can see all the firms that have put in recommendations on Apple computers or Apple Incorporated. So it is a pass here. So our current ratio is 2 to 2, right? But we are going to do that for all 12 steps, right? So at the end, we should end up with some kind of ratio like this, something like that at the end. But we'll see. We'll see what happens. So we're just doing 4 steps today, and part 2. Part 3 and part 4 will conclude this series. So look forward to those. But this is how you complete this assignment, by selecting them in bold and doing it exactly how I showed you here. You can see the next slides are already labeled: Apache Corp, Occidental Petroleum, EOG, and Peloton. So you're going to go ahead and fill those out exactly like that, save it, and then upload it onto your Google Classroom. And that is it for this assignment.